What did you think about the company's results yesterday?
Hi, Becky. Thanks for having me. I was impressed on a couple of things. For years, Tesla has been a survival story, and it's clearly not a survival story now. It's emerging as a scaling competitor as they approach 1 million cars annually sold and delivered. But I think what was most impressive to me is the gross margins. The gross margins are approaching 30%. Just to put that in perspective, that is 3 times the gross margin level at GM and about 6 times the gross margin level at Ford. And they seem to be less affected by supply chain issues, and they are because they control their own destiny largely on their chips. So they are, their sales, as you said, were up more than 70% year over year, versus GM and Ford, which are seeing declines of around 30% year over year. So I think there was a lot to be impressed with, and they're sitting now on $16 billion of cash. So they're emerging as a formidable competitor.
Yeah, John, it seemed like they hit on just about every metric and surprised to the upside on a lot of them. I was a little surprised by the stock's performance, down by about 1%. Is that just because people have priced all of this in? The stock has run so much and they kind of expect perfection at this point?
I think a lot of that was priced in. I think you're right. But one of the surprising things was that they are taking price and increasing prices. They're showing that with their demand, which they're now building, multi-month backlogs, that they're able to take price increases. So that helps them absorb any increases they're seeing in input for commodities and other supply chain shocks. And I think that is one aspect that I wasn't expecting, quite frankly, is their ability to extract price in this market.
When you have customers who are willing to sign up and wait for months and months potentially to get the product, I don't know how long that lasts. You think that they need to do more to ramp up production in order to meet that demand, right?
I think that is a key headwind, is production capacity. And they talked about that in the earnings call, and were, I think, pretty straightforward and transparent about that. They've, for years, been a single factory company in Fremont, California. Shanghai is now online, and they've proven they can open more than one factory now and produce at volume. Shanghai is actually producing so much volume, they're exporting back to North America. And they've got 2 more factories coming online over the coming months, one in Austin, Texas, and one in Berlin. And so I think that the thing to keep an eye on here is their ability to increase the production capacity to meet demand.
Hey, John, it's Brian Sullivan. I know we talk about Tesla all the time as Tesla, and they're changing their battery technology that might increase margins as well, going to a lithium iron phosphate. But outside of that, let's talk about Rivian, the F-150 Lightning, the Lucid, the Mercedes EQ, the Audi e-tron, the e-Pace from Jaguar. Is there any real competitive threat to Tesla's EV dominance right now?
It's a great question, Brian. I think what the competition does is it opens more eyes to EVs. And right now, Tesla's got a dominant share in the U.S. They're 65% market share in the U.S., 21% worldwide. But I think that's in the context of Tesla only having 1% market share in the global car market, and EVs only having 4% market share. So if you consider, EVs going to potentially 50% of cars sold, that's already happening in nations around the world. Switzerland just last quarter reported that more than 50% of cars sold there were either electric or hybrid. That 4% has the ability to grow 15 to 25 times. So I think we're at the very early innings of market growth. And as the market grows, even if Tesla's share shrinks, their gross volume is going to increase. And so I think we're at the beginning of what will be a multi-decade growth story for electric vehicles around the world.